John Higgins, Mortgage One. Happy Monday. So last week was pretty eventful. We started out with a revision to the yearly jobs numbers. So over the past 12 months, 800,000 jobs were removed from the statistics and kind of put a little bit of a tenor into the interest rate market, which was followed by the Jackson Hole economic meeting where Federal Reserve Chairman Powell spoke and basically green-lighted a cut coming in September and probably many to follow. So now that, Chairman Powell has kind of tipped his hands that the time is now. We were hoping that was going to come earlier this year, but inflation numbers got a little bit out of control. They have started to moderate. The Fed has recognized that. Something like 90% of all the inflation that the Fed is reporting right now is actually coming from shelter and rents. So they understand that the target of 2% is nearing, and they don't want to force the economy into a recession. They want to try to do this thing called a soft landing, where they're able to bring inflation down, glide the economy into a soft landing where we don't go negative. We actually just kind of get close to zero in growth and then start to grow from there. But what we're taking away from this week is rates are in good shape, because the Fed is going to start to get aggressive in cutting rates. There is talk that they'll go 50 basis points in September. 25 is certainly baked in, but we'll have to see. What does that mean for mortgage rates? Well, if you look back to January of this year, we had seen rates start to get towards that 6.5 number on 30-year fixed money. And at this point, we're right at that 6.5 level. So that really puts us at the best rates we've seen all year. And if things continue and the Fed starts to cut rates a couple times yet this year, as we're heading into 2025, the affordability index that has been so tough for our home buyers certainly will get better. If there are sellers sitting on the sidelines thinking they don't want to take on a rate of 8% when they may have a 3% interest rate locked in from COVID refinancing, they may, if we can get back closer to 6% or just below, that could spur a few of those listings to come to market, which the market desperately needs right now. If we think that lower interest rates are going to force more buyers into the market, we don't get any sellers, the market just gets crazy again, and we'll have that imbalance where too many buyers chasing too few listings. So all great news this week. We'll see what the follow-on with the interest rate environment is. The bond market seems to like it, but they haven't gotten too crazy yet. But certainly mortgage rates getting to a 2024 year low is fantastic news. So we'll give you an update next week after the market digests all this information. Have a great Labor Day weekend. We'll catch you next week.